I've been around the market long enough to watch more men ruin themselves by guessing than by any other fault. Guessing is easy, and that's why it tempts so many. But in this business, the easiest habit is also the most dangerous. Do you think a man can build a fortune on guesses? No, not for long. He might get lucky once, maybe twice, but the market will take it all back sooner or later. It always does. That's why I tell you discipline will outlast any lucky streak. Discipline is the only thing that keeps a trader in the game when the guessing crowd has long been wiped out. I can't tell you how many times I've watched men crowd around a ticker tape, listening to some fellow with a sure tip. They hang on every word as if he's whispering the secrets of the gods. But here's the truth. He doesn't know. He's only guessing, just like the rest. And what happens when you buy on someone else's guess? You don't own your trade, you don't have conviction in it, and when the tide turns against you, and it always does at some point, you'll be the first to run out, because you never had a reason to be in. Tell me, how long do you think a man can last in the market if he never knows why he's in a trade? Discipline means you wait for your own setup, your own signal, your own plan. It means you stand aside when the picture isn't clear. Most men can't do that. They feel they must be in the market every day, every hour, or else they're missing something. They can't bear to watch prices move without them. That impatience, that urge to act without reason, that's guessing in disguise. Do you think the market cares whether you're in or not? No, the market will keep moving with or without your money in it. The market doesn't even know you exist. That's why discipline, not guessing, is the trader's true weapon. I learned long ago that it's not the big wins that save you, it's the avoidance of the bad losses. And the bad losses come when you guess. You may think you're being bold, you may even dress it up with some quick reasoning, but in your heart you know when you're guessing. And if you're guessing, you're gambling. The market has no patience for gamblers. It will grind you down until you've got nothing left but regrets. Now, let me ask you, do you want to trade to satisfy a craving, or do you want to trade to build something lasting? Patience is the backbone of discipline. It means waiting when everyone else is rushing. It means sitting on your hands when your instincts scream at you to act. You see, the hardest thing for a man to do in this game is nothing. But very often, nothing is the wisest course. The crowd will call you a fool for sitting out, but that's because they can't resist guessing. They see action, and they must be part of it. And 9 times out of 10, they're the ones who pay for that action. Do you see the difference between their fever and the calm of discipline? I've often said that the market is never wrong, only opinions are. And most of those opinions are nothing more than guesses dressed up as certainty. A disciplined man doesn't cling to opinions. He follows the tape, the price action, the trend. He follows what is, not what he wishes. Guessing is always about what might be, what you hope will happen. But discipline sticks to what the market is actually telling you. If you think about it, isn't it foolish to argue with the one thing that can never be wrong? A man who guesses in the market is like a sailor who throws away his compass and steers by the shape of the clouds. Maybe he gets lucky and makes land once or twice, but the odds are he'll wreck himself sooner or later. The disciplined trader, he keeps his compass, he knows where he is, and he doesn't let the sky fool him. The compass doesn't promise smooth sailing, but it gives him direction. Isn't that what you need when the waves start rising? Now, people often ask me why discipline is so hard if it's so important. I tell them it's because discipline goes against human nature. Human nature wants excitement, wants action, wants to feel alive. Guessing gives you that rush, placing a trade on a hunch, chasing a tip that gives you a thrill. But it's the same thrill a gambler feels tossing dice. The market will let you have your fun, but it will also present the bill, and the bill is always higher than you expect. Have you noticed how easy it is to start guessing once you've had a win? You start to feel you can't miss. That's the most dangerous time of all. The disciplined man knows he can miss. He knows he will miss. He knows he'll be wrong often. But here's the difference when he's wrong. He knows it quickly and acts on it. He cuts his loss and waits for the next real opportunity. The guesser, he holds on, hoping his luck will turn, guessing it will come back his way, and that's how small mistakes turn into disasters. Would you rather take a scratch and walk away clean, or would you rather guess yourself into a hole you can't climb out of? One thing I've always said is that speculation is as old as the hills, but it's never changed. Men will always look for shortcuts, always believe there's an easier way, but there isn't. The only way is the hard way: discipline, patience, study, and control. Guessing is the shortcut, but shortcuts in this game lead you right off a cliff. I ask you, if the market has beaten countless men before you, do you think it will spare you just because you guessed right once or twice? You must understand, discipline is not just about entering trades. It's about everything: your size, your timing, your exits, your rules. If you let guessing sneak into any part of that, you're weakening your whole structure. One guess leads to another, and before long, you're not trading your plan anymore, you're just drifting. That drift is fatal. Haven't you ever noticed how one undisciplined decision often snowballs into more? Discipline also means knowing when to take profits. Most men are greedy. They guess the trend will keep going just because they want it to. And then they watch their profits vanish. The disciplined trader takes what the market gives and doesn't argue. He doesn't guess the top. He doesn't guess the bottom. He takes his share and steps aside. Isn't that wiser than gambling on the unknown? Now let's talk about the crowd, because the crowd is always guessing. The crowd trades on tips, rumors, headlines. They act fast because they fear being left out. And when the crowd acts, it creates movement, but movement without foundation. The disciplined trader watches this, waits for the frenzy to burn itself out, and then acts when the picture is clear. Do you see how guessing with the crowd puts you at the mercy of their emotions? I remember times in my early years when I thought I could outguess the market. I'd jump in and out on a whim, chasing every flicker. Sometimes I'd win, but more often I'd lose, and the losses hurt worse than the wins felt good. It wasn't until I learned to sit tight, to act only when my rules said act, that I began to see real progress. The market taught me that lesson the hard way. Wouldn't you rather learn it now, with words, than learn it later with your account? Discipline also protects you from yourself. Because your worst enemy in trading isn't the market, it's you. Your own greed, fear, hope, impatience, those are what guessing feeds on. Discipline puts a wall between you and your impulses. It forces you to act on reason, not emotion. Isn't that the kind of guard you need in a world where every tick tries to shake your nerve? Another thing, guessing makes you inconsistent. One day you're a bull, the next day a bear, depending on which way the wind blows. You can't build anything on that. Discipline makes you steady. It gives you a method, and with a method, you can measure yourself. You can learn, adjust, improve. Without it, you're just tossing coins in the dark. And tell me, can a man toss coins his whole life and expect to come out ahead? The funny part is, most men know discipline is the key, yet they still fall back to guessing. Why? Because guessing is easier in the moment. It requires no preparation, no patience, no restraint, but it costs you more in the long run. Discipline, on the other hand, costs you effort up front, but it pays you dividends over time. So I ask you, do you want the short thrill of a guess, or the lasting satisfaction of control? I'll say it again, it's not what you make that counts, it's what you keep. And you'll only keep what you earn through discipline. Every fortune I've made, and every fortune I've lost, has traced back to that truth. When I was disciplined, I prospered. When I guessed, I paid. That's the plain record. Isn't that enough evidence for you? Guessing in trading is just gambling. Discipline builds longevity. That single idea has broken more men than they care to admit, and it has saved the few who chose to listen. You see, anyone can put money into the market and hope for the best. Hope is cheap. Guessing is easy, and gambling comes natural to human nature. But what happens when the market turns against that guess? What happens when the luck that carried a man yesterday abandons him tomorrow? The market doesn't forgive. It doesn't care whether your hunch was strong or weak, whether you felt certain or half certain. It doesn't care if you guessed right 3 times in a row. The 4th time can take back everything, and then some. That is gambling. That is what guessing really is when you strip away the excuses. Now discipline, on the other hand, is the opposite of gambling. Discipline means you have a reason, a rule, a structure for every move. It means you act only when conditions meet your requirements, not when a whim stirs in your chest. Think about it. Would you walk into a casino and expect to come out ahead if you kept betting on whatever number felt lucky? The answer is no, and yet men walk into the market every day and do the same thing with their capital. They buy because a friend said so. They sell because they feel nervous. They switch positions because a headline rattled them. That's nothing but gambling in disguise. Have you ever caught yourself doing the same? The difference between guessing and discipline shows most clearly in how a man reacts to loss. The guesser takes a loss and immediately tries to make it back on another hunch. He doubles down, he changes direction, he chases every flicker of movement, desperate to recover. He is ruled by emotion, by the fear of being wrong, by the hope that maybe his next guess will save him. And more often than not, that cycle grinds him into dust. The disciplined trader takes the loss as part of the game. He knows losses come, and he knows they are manageable so long as he follows his rules. He cuts the position, clears his head, and waits. He does not scramble for the next coin toss, because he never entered the first one on a coin toss. Which kind of trader do you think lasts longer? Longevity in this business isn't built on one big win, no matter how sweet that win feels. It's built on surviving the long run, year after year, cycle after cycle. Guessing will never give you that. Guessing will maybe hand you one strong season, but then the wheel turns, and the game shifts, and your guesses stop lining up with reality. Discipline doesn't depend on the season. Discipline adjusts, adapts, and carries you through because it is rooted in process, not chance. Tell me, do you want to be remembered as a lucky player for a year or a steady operator for a lifetime? Another way to look at it is this: guessing makes you a victim of the market. Discipline makes you a student of it. The man who guesses throws himself at the mercy of every swing. He's reactive, always behind the curve, chasing what just happened instead of preparing for what could unfold. The disciplined man studies, prepares, and waits. He is not surprised when the market shifts, because he has already decided what he will do if it happens. He is not desperate to grab at every opportunity, because he knows there will always be another, and only the right ones matter. Do you see the difference between being a victim of chance and a master of preparation? The market feeds on guessers. They are the lifeblood of its movements. Their money becomes the fuel that drives the disciplined operator's account higher. Every time a crowd of guessers piles into a stock on rumor, they create the conditions for the disciplined man to take advantage when the truth shows itself. That's how it's always been. Speculation thrives on the impatience of the masses. So if you find yourself swept up with the guessing crowd, ask yourself, do you want to be part of the fuel that burns away, or do you want to be the fire that endures? It's worth remembering that the market is designed to tempt you into guessing. Prices move quickly, headlines shout urgency, other traders brag about sudden gains. All of it is bait for the undisciplined. The ticker tape never sleeps, and it whispers to the weak-nerved man that he must act now, before it's too late. That whisper leads straight to guessing. Discipline is the ability to ignore that whisper until your rules line up with action. Can you imagine how much strength it takes to do nothing when the crowd screams for action? That strength is what separates the gambler from the operator. Let's talk about emotions, because guessing is nothing more than emotion in action. Hope, fear, greed, excitement, these are the seeds of every guess. You see a stock rising fast and you hope it will keep going, so you jump in without a plan. That's guessing. You watch a position dip a little and you fear it will fall further, so you sell without thought. That's guessing too. You hear of someone making a killing in a hot sector, and your greed pushes you to buy the same thing late in the move. Guessing again. Now compare that to discipline. Discipline strips emotion out of the process. Discipline says, here is my signal, here is my stop, here is my target. Until the conditions match, I do nothing. Doesn't that sound calmer, steadier, more controlled than chasing every flicker of feeling? Guessing also gives you no foundation for growth. If you win by guessing, what do you learn? Nothing, except that you were lucky. You cannot repeat it reliably, you cannot build on it, you cannot scale it. Discipline, though, creates a record you can study. You can see what worked, what didn't, where you followed your plan, where you slipped. That feedback is gold. It makes you sharper over time. The guesser has no feedback, only a string of random wins and losses that teach him nothing. Isn't progress in skill worth more than the fleeting thrill of a lucky break? Even in the short run, guessing wears you down. It drains your energy because you're always on edge, always reacting, always second-guessing yourself. Discipline conserves your energy. You wait quietly until your conditions arrive, then you act decisively, without hesitation. You know what to do before the moment arrives. That steadiness lets you trade longer, think clearer, and keep your balance. Longevity in this business isn't just about money, it's about mental stamina. How long do you think a man can last if every day feels like a coin flip with his fortune on the line? The simple truth is that the market doesn't owe you clarity, but discipline allows you to function, even when clarity is scarce. Guessers try to force clarity by acting on incomplete information, hoping it will turn out well. That's gambling. Discipline accepts uncertainty and waits for the market to show its hand. One path tries to force the world into your plan, the other waits for the world to align with it. Which path do you think the market respects? You must understand, every fortune that lasts in this business was built on discipline. Luck and guessing may create a flash of wealth, but that flash dies as quickly as it came. Only discipline builds the foundation strong enough to endure the storms, and there will be storms. Every trader faces them, and only those with rules, patience, and restraint make it through. Guessers are washed away in the flood. And you building your house on sand or on rock? Patience to wait for clear signals is harder, but safer than chasing action. That single truth has humbled more traders than any market crash. Because it runs against everything in a man's nature. The market flickers every second, the tape prints new numbers without rest, and every movement whispers, act now, don't wait, you'll miss it if you sit still. Most men can't resist that whisper. They see price jump, they see others rushing in, and they leap without a plan. That is chasing action. It feels alive, it feels thrilling, but in the end it empties more accounts than it fills. Waiting, true waiting, requires a discipline that feels like punishment at times. But it's the kind of punishment that saves you. Patience is not just sitting on your hands blindly. It's sitting with purpose, with a rule in mind, with conditions laid out in advance. The patient trader is not idle, he is watching, measuring, preparing. He knows what his setup looks like, and until the market shows him that picture, he refuses to move. Compare that to the man who chases every flicker. He doesn't wait for alignment. He doesn't need confirmation. He convinces himself that action alone is progress. But is it? Think of a man rowing furiously in circles. He exerts himself, he sweats, he feels busy, yet he goes nowhere. Isn't that the same as chasing without patience? The hardest thing to explain to a young trader is that doing nothing can be the most profitable action of all. He thinks every hour not spent in a trade is wasted. He believes the market owes him an opportunity on demand. But the market owes nothing. The market only reveals itself when it's ready, and those moments are far fewer than the crowd thinks. The patient man accepts this. He knows that trading is not about being in the market all the time, it's about being in the market at the right time. The impatient man cannot bear that thought, so he forces trades where none exist. Tell me, who do you think pays the price for that impatience? Chasing action is rooted in fear of missing out. You see a stock rallying and think, if I don't get in now, I'll miss the move. So you buy high, without a signal, without a plan. Then the rally stalls, the price pulls back, and you're left holding the bag. Or you see others profiting and you feel left behind, so you jump in late. That is the mind of a chaser. Patience frees you from that trap. Patience says, There will always be another trade. If I miss this one, it doesn't matter. My rules will lead me to the next. Doesn't that sound steadier than living in constant fear of missing out? Clear signals are like solid ground. When you see them, you know where you stand. They don't guarantee success, nothing does, but they tilt the odds in your favor. Acting without them is like stepping into quicksand. You might stay above the surface for a moment, but sooner or later you sink. The chaser trades in quicksand because he cannot wait for the firm ground of confirmation. The patient trader builds his moves only on solid ground. Which foundation do you think holds up in the long run? Patience is also protection against noise. The market produces endless noise, tiny movements, sudden spikes, false breakouts. If you react to every one, you'll be whipsawed into ruin. The patient trader filters the noise by waiting for patterns to confirm, for setups to mature. He doesn't mistake every flicker for a signal. Chasing action is the art of mistaking noise for opportunity. Waiting is the art of separating the two. Have you noticed how many times you've been lured by a sudden move, only to see it reverse the moment you enter? That is noise punishing impatience. Another truth is that patience conserves capital. Every unnecessary trade costs money in commissions, spreads, slippage, and losses. The chaser bleeds from 1,000 small cuts. The patient trader bleeds rarely because he only enters when the opportunity is clear. Over time, that difference is massive. Longevity in the market isn't just about making money, it's about not wasting it. Do you see how every impatient trade shortens your runway, while patience keeps your powder dry for when it really counts? But patience is not natural. It must be trained. Human instinct pushes us toward action, not inaction. We equate movement with progress, silence with wasted time. The market preys on this instinct. The tape is a constant invitation to act, and the crowd reinforces it. When you're sitting out, others will call you timid, or foolish, or lazy. They'll brag about the trades they're in, the gains they're making. It takes strength to endure that pressure and remain still, yet that very strength is what separates the survivor from the casualty. Can you see why patience is rarer than guessing? I've seen men ruin themselves simply because they couldn't wait. They had capital, they had knowledge, but they lacked patience. They forced trades in dead markets. They chased rallies too late. They bought weakness before it was finished. They wanted action more than accuracy, and the market punished them for it. On the other hand, I've seen men of modest skill thrive simply because they had the patience to wait for perfect conditions. They didn't trade often, but when they did, their trades counted. Isn't it remarkable how restraint can outshine brilliance? Patience also gives you clarity of mind. When you're chasing action, you're in a constant state of rush, always reacting, always second-guessing. That stress clouds your judgment. You start seeing signals where none exist, just because you want them to be there. But when you wait calmly, you see the market as it is, not as you wish it to be. You're not forcing patterns, you're recognizing them. That clarity is priceless. How many times have you looked back at a hasty trade and thought, if only I had waited a little longer, the truth was obvious. Even when a patient trader misses a move, he loses nothing. His account is untouched, his mind is calm, and another opportunity will come. But when the impatient man misses a move, he often pays twice, once by losing money chasing late, and again by losing peace of mind. He obsesses over what he missed, he forces the next trade even harder, and the spiral continues. Patience frees you from that spiral. Wouldn't you rather miss a move cleanly than be dragged through the mud chasing it? It's important to understand that patience is not passivity. It's active waiting. It's preparation. While others are rushing into every candle, the patient trader is studying, planning, rehearsing his entry and exit. By the time his signal appears, he is ready. The chaser, by contrast, is always unprepared, scrambling to react, improvising under pressure. One is calm, the other is frantic. In a game where calmness equals control, which side would you rather be on? The discipline of patience also compounds over time. The more you practice it, the stronger it becomes. At first it feels unbearable, you itch to act, you fight the urge, and you feel you're missing out. But with each time you resist, you see the benefits. You see how much money you save by not chasing, how much clearer your decisions become, how much steadier your account grows. That reinforces the habit until waiting becomes second nature. Then you no longer suffer from the itch to actuate easily because you trust your process. Isn't that worth cultivating? The truth is, most fortunes lost in the market were lost through impatience. Men could not wait for clarity, so they jumped into fog. They believed they could navigate blind, but the fog swallowed them. The few who endured were those who waited for the fog to lift before taking a step. And still today, the same law applies. The market has not changed, only the faces of the players have. And the question remains, are you the man who chases every flicker, or the one who waits for clear skies? Guessing may bring quick thrills, but discipline delivers lasting survival. That's the kind of lesson the market writes in ink that never fades, because it comes from the oldest law of speculation: excitement is cheap, endurance is costly. The crowd always confuses the two. They chase the fast thrill of being right once, twice, maybe 3 times on pure luck, and they tell themselves they've mastered the game. But the market, patient as it is merciless, waits to prove them wrong. It doesn't care about how clever you felt on a lucky day. It only cares how steady you can be through 100 different days. And steadiness never comes from guessing, it only comes from discipline. The thrill of guessing is seductive. You see a sudden move, you feel the rush of opportunity, you act without hesitation. When it goes in your favor, the excitement is intoxicating. You feel sharp, you feel alive. You tell yourself you saw something others didn't. But deep down you know it wasn't skill, it was chance. And chance is a fickle ally. The next time, and the time after that, it will betray you without warning. Tell me, how long do you think a man can survive if his entire livelihood depends on the whims of chance? Survival in the market is not about one good trade, or even a handful of them. It's about staying in the game long enough to let your edge compound. The man who relies on guessing may survive a season, but the man who relies on discipline survives a lifetime. That difference is everything. Discipline is the set of rules that shields you from ruin. It tells you when to enter, when to exit, when to stand aside. It strips away the thrill, but in exchange it gives you endurance. Which matters more, a moment of excitement or a future that stretches far enough to actually build wealth? The thrill of guessing is a trick your own mind plays on you. When you're right by luck, it feels better than being right by method. Why? Because it strokes your ego. You believe you outsmarted the market, you beat it at its own game. But no one outsmarts the market for long. The disciplined trader doesn't seek that kind of satisfaction. He doesn't need the thrill. He finds contentment in following his plan, whether the trade wins or loses. His pride comes not from guessing right, but from executing right. Isn't that a sturdier foundation for survival than the fragile high of a lucky guess? Every great collapse I've witnessed had guessing at its core. A man builds a streak, feels invincible, and raises his size without rules. He mistakes fortune for genius. Then comes the inevitable reversal. One bad guess, magnified by his overconfidence, wipes out months or years of progress. That's the cost of chasing thrills. Discipline, on the other hand, prevents the blow-up. It caps your losses, it keeps your size in line, it stops you from believing you're bulletproof. You might not get the same wild highs, but you avoid the devastating lows. Would you trade fleeting euphoria for lasting security? The problem with thrills is that they demand more. A small win excites you once, but the next time you need a bigger win to feel the same rush. This is how gamblers destroy themselves. They escalate their risks chasing the feeling, not the profit. Guessing in the market follows the same pattern. One hunch isn't enough. You need another, then another, each bolder than the last. Eventually the market catches you leaning too far, and down you go. Discipline doesn't demand escalation. It is steady, consistent, repetitive. It may feel boring, but boring keeps you in the game while the thrill seekers burn out. Do you want excitement or do you want survival? Discipline also transforms your relationship with loss. When you guess, a loss feels crushing because it exposes that you never had control to begin with. It shatters the illusion of your luck. That pain pushes you into revenge trading. chasing the thrill of redemption. When you operate with discipline, a loss is just part of the plan. It stings, but it doesn't unnerve you. You already accounted for it, and you already know how to respond. That calm response is what allows survival. Isn't it clear how much safer it is to accept small losses with discipline than to spiral after a guessing loss? Survival is not glamorous, but it's the only thing that matters. The market doesn't reward the flashiest trader, it rewards the ones still standing after the rest have fallen. Guessing might give you a headline, a story to brag about at a dinner table, but discipline gives you longevity, and longevity is what turns trading from a game of chance into a business. Would you rather have one story of a lucky strike or a lifetime of steady results? Think about the crowd for a moment. The crowd thrives on guessing. They need the excitement, the drama, the daily rush. They chase tips, they follow rumors, they act on headlines. Their accounts rise and fall like a roller coaster until eventually the falls outnumber the rises. They crave survival, but they sabotage themselves with their hunger for thrill. The disciplined operator lets the crowd play its game, because he knows their guessing creates the very opportunities his rules exploit.